Sir, very happy evening to all. Sir, we are going to start the revision of the last chapter, that is working capital management. Actually, we understood that our subject FM, financial management, is having mainly three objectives. Number one, investment decisions. Where to invest the money is what the investment decisions. Then financing decision, from where to raise the money is what the financing decision. And dividend decision, sir, how much dividend should be distributed as, how much amount of money should be given back is called as dividend decisions. In this investment decisions, my dear lovable students, we are having long-term investments and short-term investments. Long-term investments are called as capital budgeting, we have just now completed, and short-term investment is called as working capital management. Under financing decision, we are having cost of capital, we are having capital structure theories, we are having, sir, leverage analysis, like that it goes. Under dividend decisions, my dear lovable students, we are having Walter's model, we are having Gordon's model, we are having Modigliani Miller approach. Are you ready with me? Now the last slot we are going to discuss is the short-term investment called as working capital management. I'm coming to the working capital management. What do you mean by management of working capital? Sir, as a financial manager, you have to estimate the working capital. You have to estimate the what is this working capital is all about, sir. For example, after you raise the fund, my dear lovable students, by way of equity share capital, preference share capital, debt, reserves and surplus, sir, if the entire money raised, that is after your financing decision, if 100% of the money, if you invest in the fixed asset, and you are saying that I am going to start the business from this moment, you can't start the business from this moment, because with the fixed asset, plant and machinery alone, you can't start the production. In order to make it workable, you need a capital called as working capital. That is called as working capital management. Are you really with me? So, as a finance manager, you have to estimation of the working capital. How much working capital you need. Number two, sir, what do you mean by working capital management? From where that fund I can generate, and how to handle the cash, how to handle the debtors, how to handle the inventory, how to handle the payable is what the objective of this chapter is all about. Fine. What is the accounting equation of the working capital? Working capital means current assets minus current liabilities. That's we already know. Current asset is the gross working capital, and current liability is the, sir, amount invested by outsider. Amount invested by outsider in my business. So in the gross working capital required, if the amount invested by the outsider in my business, if I reduce, means I will get the net working capital. I will get the net working capital. So management of working capital is about managing of current asset and current liabilities in a business. So you have to clearly manage each element of current asset, each element of current liabilities. If one element goes wrong, entire system, business will go wrong. In a broad classification, current asset that need management attention are receivables, debtors. For example, today if I am making a credit sale, after 9 months only I am getting money from the debtor, means 9 months my money is blocked in debtor. So that much time, sir, money should not be blocked in debtor. That means I should manage the debtors in a very better way. And inventory stock, sir, if I don't invest in stock at all, I may go stock out. Stock out will lead to loss. Or if I invest huge amount in stock, unnecessary stock pile up, it will lead to huge carrying cost that you would have already studied in your material chapter. And cash and advance like prepaid expenses, etc. If I am holding high amount of cash, sir, I am losing. I will be having liquidity. But if I park that extra cash in the, sir, FD or something, I will be able to earn some interest. So if I am holding more cash, I am losing that opportunity. Are you really with me? In the liability side, current liabilities are like payable, creditors and other outstanding dues. Sir, if creditors is saying that when I supply the raw material today itself, if I have to get the money, means I need money in advance, whereas my debtor is paying very late. So he will be paying late only, but to this guy I have to pay now itself. So my entire business will go wrong. So each components of working capital as classified above are managed separately. It's like, sir, in our body, two eyes need separate care. Sir, two hands need separate care. Legs need separate care. As a body as a whole need separate care. If you taken care of every organ in our human body, we can say that I am taking care of the body as well. So if you have to take care of current asset, that is cash, that is, sir, stock, raw material stock, WIP stock, finished good stock, datas, and sir, all the elements of current liability. But the managerial approach and policies like liquidity versus profitability, conservative to aggressive investment in working capital are at the core of every decision taken by management. Abdina, sir, you are saying that there should be proper stock in the organization. For that, if I am started holding more stock, automatically my carrying cost will be high. If I don't carry stock at all, I will become stock out, and my, sir, the opportunity cost will come, correct? So I have to take, or I have to fix a working capital where my liquidity position and my profitability position will trade off. My liquidity position and my profitability position will trade off. That's what trade off between profitability and liquidity. What will happen, sir, for smooth functioning of day-to-day business? Maintaining of liquidity of fund evenly during the operating cycle is important, but unnecessary tying up of fund in idle assets is not only reduces the liquidity but also reduces the opportunity to earn better return from a productive asset. Sir, I understood that in each element of the working capital I have to invest. But if you are investing more money in each element of working capital, unnecessarily my money will be held up there. Sir, there two things will happen. I am losing an opportunity to earn a return. If that money, instead of investing there, if I would have invested somewhere, I would have got some return. And here also, unnecessary idle fund are parking. So trade-off between the liquidity and profitability can be attained by using the following technique. First one, inventory, my dear lovable students. The first component is inventory. How you are going to manage the inventory, whether it is raw material inventory or WIP inventory or finished goods inventory. Advantages of higher side, profitability. Sir, if you are keeping, sir, so much of inventory in your premises, fewer stock out will only come. That means stock out option itself will not be there. Whoever asking goods, you can, sir, produce and give. That means increase the profitability, right? So profitability will increase. But lower inventory require, for example, advantages of lower inventory side. I am not keeping so much of inventory, sir. I am keeping only required inventory, sir. It lower inventory require less capital. So no need to invest more capital in the inventory. But, sir, endangered stock out and loss of goodwill. Sometimes a very big order will come and they will say that quickly manufacture and give to me. I am saying that, sorry, sir. In my, sir, stores, I don't have that much raw material, sir. Sir, you give order to me now, I will place an order with my creditor. He will supply the raw material because minimum lead time and maximum lead time is there in costing, right? He will supply within minimum lead time of or emergency purchase of, sir, 10 to 15 days. Let the raw material come. I will manufacture for you. After that, I will supply you. He will say that, poda, because my business will lose. So if I keep higher raw material, then also problem. If I keep zero raw material or lower raw material, then also problem. Then I have to keep a trade-off between profitability and what? Liquidity. My profitability should not be affected and also my liquidity should not be affected. Right, sir? For that, use technique like economic order quantity or just-in purchase called a JIT purchase to carry optimum level of inventory. Always you ensure that you are carrying optimum level of inventory. What level of inventory? That is called as, sir, business policy. That's what, while estimating the raw material, we will say that it is a policy of the company to carry raw material for 3 months. 3 months. Why that is a policy? Because the person, some listed companies and all, you know how the recipients, for example, I am person, I have to place an order with you. I have to place an order with you. The first question I will ask you is, what is your inventory carrying policy? Because if you are having an inventory carrying policy of only what, 1 month, I will say that if the 1 month stock has been exhausted in the stores, within how much time your supplier will supply the goods? So after 1 month, if production stops, means, sir, you will order with your supplier. If that guy takes more time, or lorry strikes comes, or abnormal reasons like COVID or something happen, my dear lovable students, where you will go for raw material? So I will say to you that you should have a raw material carrying period of at least how much month? 3 months. Like this only that policy will be, sir, designed. That company will take that policy saying that how much production they are going to make in a year. Now the receivable, I am coming to receivable. Receivable means what? Debtors. After I make the cash sales, that moment itself I will get the money. That is the beauty of the cash sales. But after I make the credit sales, I am saying to the debtors that you give whenever you can, then they will never give at all. Correct? Higher credit period, I am giving 50 days, 60 days, 1 year credit period means attract customer. Everyone will come and buy product. It will increase revenue also. Yes, profitability increases in books, not in the cash box. Because if you see the net profit will be huge in the books. Correct? But sir, if you are keeping very less, okay, so this is having one advantage, profitability increases. Ipo, I am not giving so much of credit period. When I make the credit sales, I am saying to my debtor that immediately pay the cash within 10 days, 20 days, 30 days. Then cash sales provide liquidity, but fail to boost sales and what? Revenue. Apo, I can't give extensive credit period to my debtor, or I can't be very stringent saying that only cash sales is allowed. If there is no credit sale, no customer will be ready to buy from me. So I have to trade off. I have to what? Trade off. How to trade off? Evaluate the credit policy. You have to evaluate the credit policy. That is called as debtors management. Use the service of debtors management, factoring agencies. There is a concept called as factor. Sir, instead of you collecting money from the debtor, you appoint some other agency to collect the money from the debtor. That is called as factoring. That is called as what? Factoring. So engage the factoring. Engage the factoring. They will ensure that they are collecting money on time. Next one, sir. Prepayment of expenses. As a businessman, there are two options you are having. Sir, you can pay all the expenses in advance. Next month rent, now itself you are paying. That is called as prepayment of expense. If you are doing like that, it reduces uncertainty and profitability at inflammatory environment. Because I will tell you, now the 1 kg tomato is 100 rupees. Okay. After 1 week, 1 kg tomato is 120 rupees. To the shopkeeper, you paid now itself for the next week consumption of tomato. How much rupees you paid? 100. So next week, if the price increases to 120, will you pay that extra 20? No. Because in inflationary environment situation, this will be very, very useful for you. This will be very, very useful for you. So if you are doing like this, my dear lovable students, if your profitability will surely increase, because you will not incur so much of cost. You will be incurring less cost only. But someone is saying that no. I will be paying only at the time of incurring the cost. Sir, let the tomato price really let it come. Sir, I am asking you a question that if it become 90, what you will do? If I pay now itself 100, it will be a loss. So I will wait for the actual price. If that is the case, it improves or maintain liquidity. That means till the next month, money will be there with you. But sir, liquidity increases. Here profitability increases. Here liquidity increases. I don't want to increase the profitability. I don't want to increase the liquidity. I want a what? Trade-off. Then you have to make a cost benefits analysis is required. You have to do a CBA, cost benefit analysis. Are you really with me? Sir, cash and cash equivalent, sir. How much cash I should hold, sir? Capital can be used in some other investment avenues. Sir, if I am holding so much of cash, my dear lovable students, instead of holding so much of cash, if I am investing somewhere, I will get some revenue, right? So here my profitability will be increased if I invest in some other place. Okay, sir. Don't hold cash at all. If that is the case, cash can be invested in some other investment avenues. Am I right? Yes, sir. So here liquidity will reduce because you don't have what at all? Cash at all. If you invest the entire money in some other investment, your liquidity reduces. Correct? Then you have to prepare the cash budget, and other cash management technique can be used to check whether you are out of cash or not, whether your liquidity is getting affecting or not. So these are the tools. That's why we are learning the tool called as debtors management. We will learn. Called as factoring. We will learn. Called as cash budget. We will learn. We will be learning, sir, EOQ. We will be learning. Now payables and expense management. Payables and honored in time improves goodwill and helps in getting additional discount. So if you are getting more additional discount, automatically profit will increase. Am I right? Sir, what happened to liquidity? Payables are honored in time, improve the goodwill and helps in getting what discount? Future discount. Even my liquidity also will increase. Evaluate the credit policy and the related costs. That means what this chapter is saying, that working capital management is like a body of a human being. In that body of a human being, sir, we are having some important components. We have to take care of eyes. We have to take care of legs. We have to take care of, sir, hands. We have to take care of nose. Every internal organ. One organ needs, sir, proper attention. If one organ goes, sir, wrong, then either profitability will get affected or liquidity will get affected. In a business organization, profitability should not get affected or liquidity should not get affected. Right up. Yes, sir. That's why we are having tools. How we are having tools in capital budgeting, like NPV, like IRR, like PI. The same way, these are the tools in the chapter working capital management to trade off the profitability and also the liquidity. Sir, I don't want a current assets or current liability where my profitability is higher and liquidity is lower. Where my liquidity is higher and profitability is lower. I want a trade-off position where I want to enjoy liquidity and also I should have a profitability. So to check those are, sir, I am having the tools. Come on. Now, investment and financing of working capital. Sir, investment in working capital is concerned with the level of investment in what asset? Current asset. Minus, sir, financing decision concerned with the arrangement to fund to finance to the what capital? Working capital. For example, first you have to calculate that how much is the current asset you need. Current asset comprised of how much is the raw material stock you need. How much is the WIP stock you need. How much is the finished good stock you need. How much is the debtors you need. How much is the cash you need. This, if you total, you will get a gross working capital. Right, sir? From the gross working capital, my dear lovable students, sir, you have to see the sources of working capital, like financing decision concerned with the arrangement of fund. Are you going to raise the gross working capital by issuing long-term loan? Are you going to raise the, sir, fund by issuing, sir, commercial paper? Or are you going to request your creditors? Are you going to request your creditors for liability? Even they are also source of fund. Are you really with me? That's what from the what asset? Current asset. You are reducing what liability? Current liability. You will be getting the working capital, net working capital. Right, sir? Yes, sir. So what are the approaches of working capital investment? So you are a businessman. You understood one thing. What you understood? No. Whatever money I have raised by equity share capital, preference share capital, debt, and also the reserves and surplus, if the entire money has been invested in the capital budgeting by investing in plant and machinery, daily I can't do the production. So in order to do the production, I have to work the business. In order to work the business, I need a capital. That capital is called as working capital. Sir, I am going to fix a working capital as a businessman. There are three approaches I can choose to fix the working capital. Or first one, I can be very aggressive. I can be very aggressive. Or I am saying that I am very conservative. Or I can say that I am very moderate. So what is aggressive, sir? Sir, a businessman is said to be aggressive if he is investing in the working capital. That is what? Current asset is kept at minimum. Kept at what? Minimum. That means what is current asset, my dear lovable students? Current asset comprises of inventory, raw material stock, WIP stock. Inventory means raw material stock, WIP stock, and the third one, finished good stock. Right, sir? Then next one, debtors. Then next one, cash. Then next one. That's it. So my dear lovable students, sir, you are a businessman. In your stores, only 2 days consumption, you have kept it as what? Stock. If that is the case, my dear lovable students, if that is the case, let me ask you a question. If suddenly you are getting a very good order saying that I need the production for next 10 days, 20 days, 30 days, My dear lovable students, will you able to sell that? Uh, yes. Will you? Yes, yes. Will you able to sell that, sir? No, sir. No, sir. My dear lovable students, if that is the case, you can't honor it. That means you have invested only less amount in the what asset? Current asset. That means you are very aggressive. You are what? Very aggressive. NDT holds lower level of inventory, follows strict credit policy, keeps less cash balance. If that is the case, we are saying that your working capital policy is an aggressive policy. What policy? Pichakara paya. Yeah, they are not keeping proper stock in the stores. They are not giving proper time to the debtor. They are not having proper liquid cash in the business. If someone is like that, you can say that such a businessman is an aggressive businessman. Aggressive working capital policy. Comfortable? Next one, conservative, sir. What do you mean by conservative? I have invested in working capital. There is no doubt about it. My current asset is increased. My current asset is entity maintains higher level of inventory. Sir, follows liberal credit policy and keeps cash balance as high as to settle any current liability immediately. Generally, sir, in the same industry, everyone is keeping only 2 months stock as the holding period. But I am keeping for 6 months, loose money. Everyone is having only 1 lakh rupees cash in hand. Sir, in my table, always 10 lakh rupees cash in hand is there. My idea is, if someone is coming and asking that you are liable to pay me this much, take it, man. That's it. Game over. So that is called as conservative approach. Sir, aggressive is very bad. Conservative is also very bad. Always you choose moderate approach. Under this approach, a balance between risk and return is maintained to gain more by using the fund in a very what manner. That means if you are following the moderate approach, my dear lovable students, then your profitability will not get affected and your liquidity will not get affected. That is called as trade-off. But aggressive means anytime you will get a big hit. Sir, conservative means unnecessary you are wasting your money. Are you agree with me? Opportunity cost will be there. Why are you holding that much of inventory? If you are holding that much of inventory, automatically your carrying cost will increase. Correct? For that much you have to pay God on rent. Automatically opportunity cost will increase. Lose money. So don't follow aggressive. Don't follow conservative. Better to follow moderate. That subject have not said like that. Subject financial management have never said that aggressive policy is a bad policy. Hello, sir. Conservative policy is a bad policy. Moderate policy is a good policy. Like that subject have not said. Sometimes you may eat 3 idli. I may eat 7 idli. I am taking classes for 15 hours. Are you taking? No. So I may need that much of energy. You simply sitting hearing, sometimes sleeping also in between. So you may not need that much energy. So you can't say that my thing is a conservative approach and yours are a what? Aggressive or moderate. So I can't say that this is good or that is bad. Everything is good. Everything is bad. Depends upon the situation. Are you agree with me? So graphical representation of the above approach towards investment in working capital is depicted as below. Always, my dear lovable students, fixed asset will be same. Because fixed asset we will not change. Correct. Sir, if it is aggressive, my dear lovable students, the first one, aggressive. Aggressive means I will be having less current asset or more current asset. Aggressive means I will be having more current asset or less current asset. That's why I am having current asset, but not so much. So I am having conservative means, sir, the conservative. This is what the level of current asset, man. Sir, average means it's between conservative and between aggressive. Sir, this may be a theory questions like that also. You may get an exam. This will be useful, right, sir? Now we are going to manage the working capital, man. Financing of NSR working capital. Financing of, from where you understood that current asset minus current liability is the working capital. This is the net amount as a business owner you are going to invest in the business. Alright, sir. So when management of an entity decide the quantum of investment to be kept in the form of what capital? If the management is thinking that this much amount to be invested in working capital after estimation of the working capital, the next question is to be answered is how the decided quantum of investment will be arranged. From where the money has to be arranged. Management explores avenues such as sources to get the working capital financed. From where and all money can be raised. The sources can be either internal to the entities known as spontaneous sources and external sources, which is arranged by negotiating with the what institution? Financial institution or bank and other specified entities called as debt factors. Either within the organization itself, sometimes they would have raised the capital. From that excess money, they can pump the money for the working capital. That is called as spontaneous sources. Or you may have reserves and surplus also. By using the reserves and surplus, you can invest the amount for the working capital. Or the second option or the opportunity available will be, you have to borrow money from outside. How you have raised the capital? You have to go to bank and ask that I need a working capital of this much. Are you really with me? Then the tandem committee has given some norms saying that, sir, approach number 1, approach number 2, approach number 3. So what are the sources of, sir, working capital? You are having sources, spontaneous sources, trade credit. That means you can go and cry before the creditor that you supply the raw material today. Please don't ask me payment today itself. Please give me a credit of 2 months. That is a spontaneous sources. Or you can give bills payable. You can give bills payable to the creditor and saying that you can get this bills payable. You can money from this bills payable after 2 months. So my bills payable is my creditor's bills receivable. So he will go and discount with the bank. So after 2 months, I can pay to the bank. By that, I can have some relaxation. This is called as spontaneous sources or accrued expenses, my dear lovable students. I can say that, sir, please wait, some expenses like wages and all. I can say that I will pay at the end of next month. I want a time lag of what? 1.5 months. So I will be getting some delay. These are spontaneous sources. Next one, negotiated sources means I'm going outside. I'm going to the bank and intercorporate loans and deposit. I'm taking deposit. Study very well, law chapter, deposit, which will come for 4 mark. Come on. Credit from financial institution or bank. I'm going to banks and taking loan. Commercial papers and public deposit. I'm issuing CP. I am issuing debenture, bills discounting and rediscounting and factoring. These are the another options. So if I am arranging the working capital within the organization, that is called as spontaneous sources. If I am arranging the working capital from outside sources, that is called as negotiated sources. Are you already with me? What are the forms of bank credit, my dear lovable students? Now you are going and standing before bank. You can ask for cash credit, CC, or you can ask for bank overdraft, or you can bills discounting, or you can bills accepting, a line of credit, letter of credit, bank guarantee. These are the various forms of banks. So bank will give you sources of finance, are working capital in these forms and all. Are you really with me? This is the introduction for the chapter. What capital? Working capital. Sir, in this chapter, we are going to estimate the what capital, man? Working capital. Sir, in order to estimate the working capital, we are having various methods. So, amount of working capital required to keep the normal business operating without any interruption is made before the operating cycle begins. Sir, what do you mean by operating cycle? You will be having cash. From where you got this cash? From the sources of finance. By equity, by preference, by debt, by reserves and surplus, you raise the fund. That means you have already taken a decision called as financing decision. So financing decision give you cash. With this cash, you will purchase raw material and you will keep the raw material in the stores. After certain point of time, that will be issued to the work area, that is WIP, and you will invest in labor and overhead. So this raw material will become what? Work in progress. This work in progress will become finished goods. This finished goods will become debtors. This debtors will become cash. That means, for example, if you are having 1 lakh rupees cash, with this 1 lakh rupees cash, my dear lovable students, today you are going and purchasing raw material. And this raw material has to be there in the stores for how many days? 15 days. After this, from the stores, you issue to the work area. Sir, it is taking 30 days in the what area? Work area. Sir, immediately after come out of the factory, we can't sell. It has to go and sit in the godown. For example, 45 days if it is going and sitting the godown. Now it has become credit sales. Correct? Once it has become credit sales, debtor has to pay me money. Debtor is giving money only within 60 days. That means 15 days plus 30 days plus 45 days plus 60 days comes to 150 days. That means now I am having cash with me, right? Yes, sir. Now this cash will become cash within how many days? 150 days. Now how much cash is with me? 1 lakh. But after 150 days, it may become 1.2 lakhs. That is extra profit. Because to the debtor, I will sell at a profit. I am not here to talk about that 20,000. That 20,000 is my EBIT, earnings before interest and tax. With that, I will again settle to the financing decision people, such as interest, such as tax, all those things will be there. So once one cycle over, I will withdraw 20,000 from that and I will reinvest 1 lakh into that. Are you really with me? And that cycle will rotate for one more time. So operating cycle, also called as what capital cycle? It indicates the length of time between paying for material entering into stock to realization from sales of finished goods. That means how much time you are taking from the payment for the what material? Raw material till the realization from the debtors. This length is called as what capital cycle? Working capital cycle. Working capital cycle. So before one cycle start, management has to determine how much to be invested in the working capital. There are various methods which are used by management to assess the amount of working capital required to keep operations on. What are the methods? Number one, they can find out the operating cycle. They can find out the current asset holding period. For how much period they are going to hold the raw material stock, how much period they are going to hold the WIP stock, how much period they are going to hold the finished goods stock, how much period they are going to hold the debtors, how much period they are going to hold the cash. Next one is the ratio of sales. Ratio of sales. They can estimate the working capital by ratio of what? Sales. And the ratio of what? Investment, fixed investment. These are the various methods of estimation of what capital? Working capital. Comfortable? Now man, in the form of an equation, the operating cycle can be expressed as follows. Operating cycle is equal to raw material. How much period? What is the raw material holding period? Plus WIP holding period, plus finished goods holding period, plus debtors holding period, minus creditors payment period is called your net working capital. If you add all this, you will get the gross working capital. From the gross working capital, if you are reducing the creditors payment period, you will get the net working capital. Net working capital. This is what that's why we are saying that working capital is equal to current asset minus current liabilities. Working capital is equal to current asset minus current asset means what is the total amount I am going to invest in the gross working capital. Minus current liability means how much amount is going to be invested by the outsider in my business. That's what current liability. So current asset minus current liability means net working capital. That is the amount I have to invest from pocket to the business. Net working capital is the amount I have to invest from my pocket to the business, because I will estimate how much is the raw material stock I need. I will estimate how much is the WIP stock I need. I will estimate how much is the finished good stock I need. I will estimate how much debtors I need. I will estimate how much cash I need. That is a gross working capital requirement. That is a gross working capital requirement. Look, sir, out of the gross working capital requirement, my dear lovable students, actually the entire gross working capital requirement should be invested by myself only as a businessman. But there are sources of finance. What are the sources of finance? The first source of finance is the spontaneous source of finance. What is the spontaneous source of finance? Creditor. What is the spontaneous source of finance? Creditors for expenses. So I will go and ask to my creditor. I will go and ask to my laborers, factory owner, rent payable, electricity payable. Please give me a delay of 1 month. Right? So actually, out of the gross working capital to be invested by the investor, that is businessman, some part of investment has been invested by outsider. So that money no need to be invested by myself. Right? That is why current asset minus current liability. Current asset means total working capital required. That is why it is called as gross working capital. Minus current liability in the sense means out of the total working capital required, how much money has been invested by the outsider. Correct? That means as a businessman, I have to invest only the net working capital. Can I proceed? R stands for raw material holding period. W stands for working WIP holding period. F stands for finished goods storage period. D stands for sir debtors collection period. And C stands for creditors payment period. That means working capital cycle is equal to raw material holding period plus WIP holding period plus finished goods holding period plus debtors collection period minus creditors payment period. The various components of operating cycle may be measured. First one, raw material holding period. What you are going to find out here, holding period. Always, you just think. One example you keep, any formula you can derive in 2 minutes. For example, if you are having 10,000 rupees in your hand, every day you are spending 2,000 rupees. For next how many days you are having? 5 days. So what is the average money you are having? The 10,000. What is the average expense? What is the average money you are having? 10,000. What is the average money? Opening money plus closing money, man. 10,000 rupees you are having, yes, sir. Correct, What is the average expenses per day? 2,000. Correct, Up 10,000 divided by 2,000 comes to 5 days. For next 5 days, you don't worry at all. That's what holding period. That's what holding period. The same way. What is the average stock of raw material I am having? Sir, in stores, I will not sell the raw material. I will consume the raw material. What is the average consumption per day? Since in numerator I have taken average, denominator also I have to take average. That means எவ்வளோ இருக்கு ஒரு நாளைக்கு எவ்வளோ அவ்வளவுதான் matter over. Totally உங்ககிட்ட how much cash you are having? 10,000. Per day how much you are spending? 2,000. That means how much is the holding period? 5 days. That means for next 5 days I am holding cash. Yes, sir. The same logic apply. How much raw material you are having? How much consumption per day? That means you can easily find out that, sir, I am holding raw material for this much days. Comfortable? Next one, sir. What is the WIP holding period? You take the in WIP, in the work area, you will hold the WIP. What is the average stock of WIP you are having? What is the average production cost or factory cost per day? Comfortable? With regard to finished goods storage period, man, what is the average stock of finished goods divided by what is the average cost of goods sold per day? Comfortable? Sir, with regard to receivables, what is the average accounts receivable divided by what is the average credit sales per day? With regard to creditors, what is the average accounts payable divided by average credit purchases per day? That means numerator also average, denominator also average. Are you really with me? If I take numerator average and denominator I have not taken average, means, my dear lovable students, it's like monkey by donkey. I want monkey by monkey, then only I will get a comparison. Am I right? That's why. என்ன இருக்கு divided by என்ன வேணும் எத்தனை நாளைக்கு ஒரு நாளைக்கு. Then I will get the number of days. Am I right, sir? Yes, sir. That's it, man. So I'm going to estimate the amount of different component of current assets and current liabilities. What are the current assets? Sir, my first current asset is raw material inventory. Then WIP inventory. Then finished goods stock. Right, sir? Then debtors. Then cash and cash equivalent. Then trade payable, otherwise called as creditors. Then direct wages. Sir, overheads other than depreciation and amortization. Can I proceed, sir? How to find out the raw material inventory? So, as a businessman, I have to keep raw material stock. I have to keep raw material in the stores. Sir, how much stock to be kept in the stores is based upon how much you are going to consume. For example, if you go to, sir, kitchen and see, Amma would have kept 5 kg of rice because Amma knows that in a month she will be maximum consuming 20-30 kgs. For example, I am saying, if she is consuming only 30 kg in a month, she will not reserve or preserve 30 kg. So what estimation of working capital? What is the estimated production? What is that? For example, in a year 60,000 units if you are going to produce, divided by 12 means every month you are going to produce 5,000 units. Right, sir? What is your policy? What is your policy? 5,000 unit is the consumption you are going to make. Every unit, for example, you are going to purchase at 3. That means 5,000 into 3 comes to 15,000. Right? Sir, as a company's policy, you want to keep the raw material stock for how much period? Do you want 2 months? Do you want 3 months? That is absolutely your policy. Absolutely your policy. Because When you are taking that policy, you should keep that whether your working capital is aggressive or what, moderate or conservative. That and all you have to keep in mind. Your profitability should not get affected. Your liquidity should not get affected. That and all you should keep. Then only you should decide a policy that if I keep 3 months stock, that will be sufficient for me. If I keep 2 months stock, that will be sufficient for me. So what I have to do now, in a year I am going to manufacture 60,000 unit. That means every month 60,000 divided by 12, I need 5,000 unit. Every unit is 3 rupees means, my dear lovable students, 15,000 is the raw material cost I am going to incur for 1 month. If my policy is I want a raw material stock of 3 months, into 3 means 45,000 rupees I have to invest in the raw material stock. Clarity? Coming to WIP, man. My dear lovable students, if it is WIP the same, how much units you are going to manufacture? 60,000. Divided by 12 means how much units? 5,000 units every month you have to go into manufacture. Correct? My dear lovable students, sir, my dear lovable students, what is the estimated WIP cost per unit? Estimated WIP cost in the sense means, sir, in order to manufacture 1 unit, I need direct material, I need direct labor, I need direct expense. I will get the prime cost. At what overhead? Factory overhead. The main problem is, my dear lovable students, sir, direct material. Generally, I will issue 100% at the start itself. Right, sir? Generally, I will issue 100% at the start itself. Correct? But the other components like labor, I will issue only 50%. Direct expense, I will issue only 50%. Factory overhead, I will issue only 50%. That means I have to first find out the estimated WIP cost per unit. It will not be equal to the full cost. It will not be equal to the full cost. Right? Assume the estimated WIP cost per unit is 7 because material itself is coming 3. For that, labor and overhead has to be applied. Assume it is 7 into average WIP holding period. What is your policy of the company? You want to hold WIP for 0.5 months, or you want to hold WIP for 1 month, or you have to hold WIP for 2 months, then you will get the cost of investment to be made in the WIP. Cost of investment to be made in the WIP. Or one line solra, try to appreciate, my dear lovable students. 50 lakhs you are taking and you are going to buy machinery A. 20 lakhs you are taking and you are going to buy machinery B. 10 lakhs you are going to take from the capital money available and you are going to buy machinery C. Another 10 lakh you are going to take from the money available and you are going to buy machinery D. My first question, total how much machine you bought? 4 machines. First machine, 50 lakhs. Second machine, 20 lakhs. Third machine, 10 lakhs. Fourth machine, 10 lakhs. So 50 plus 20, 70 plus 10 plus 10. So from the total money available, you took 90 lakh. And you purchased how many machines? The same way, from the total money available, you will invest a part of the money in the raw material stock, part of the money in the WIP stock, part of the money in the finished goods stock, part of the money in the debtor, and part you keep it as cash. This is called as what? Capital management. Working capital management. Comfortable? Able to link it? Now coming to finished goods, my dear lovable students. Sir, finished goods, how many units you are going to manufacture? 60,000 units you are going to manufacture, right? Divided by 12 means every month how many finished goods you will manufacture? Into estimated cost of production. Look, sir, this is estimated WIP cost. This is 7 per unit. But this will never be 7 per unit. This will be more than 7. Because every element of cost will be 100% completed. Correct? Into average storage period. You want to keep the raw material, sir, finished goods for 3 months. That means 5,000 into 10 comes to 50,000. That is for 1 month. Into 3 comes to 1,50,000. That means from the total money available, take 1,50,000 and keep that 1,50,000 in the finished goods. Comfortable? Now, debtors, my dear lovable students. Sir, estimated credit sales unit. Inga estimated production unit. Inga term changed. Not the estimated sales unit. Because there are 2 types of sales are there. Cash sales and credit sales. For cash sales, I don't need to invest working capital at all. Right? Yes, sir. So estimated what sale? Credit sale. For example, out of 60,000 unit, I am producing 20% is cash sale and 80% is credit sale. Purida. That means 60,000 into 80% is equal to 48,000. So totally in a year, I want to make 48,000 credit sales unit. So 48,000 divided by 12 comes to every month I want to make a credit sales of 4,000 unit into cost of sales. There I will not include the debt because depreciation is a non-cash item, my dear lovable students. Hello sir. Into average collection period. You want the average collection period as 2 months, then into 2 months. Then I will get the cost of debtor. So the same way I have to calculate the cost of raw material stock, cost of WIP stock, cost of finished good stock, cost of debtors, cash and cash equivalent, minimum desired cash and bank balance to be made. It is a policy of the company. Company can decide that I am going to keep 10,000 rupees minimum cash. I am going to keep 12,000 rupees minimum cash, like that. So if you add raw material holding period plus WIP holding period plus finished goods holding period plus debtors collection period, you will get the gross working capital. This is the amount you have to invest for the purpose of working capital. For this you need source. There are two sources are there. Spontaneous source are there and also outside source are there. The spontaneous source is what payable? Trade payable. Sir, you will check estimated credit purchase. One more highlight. It's not total units of purchase. It is estimated credit purchase. So my dear lovable students, for out of 60,000 units you are going to purchase, assume that 70% is credit purchase, means 60,000 into 70% comes to 42,000 units is what you are going to purchase. So 42,000 divided by 12, you will get a monthly purchase. Are you all ready with me? You will be getting 3,500 into sir credit period allowed by supplier. That means this into what is the purchase price you have to multiply. Then you will get a cost of 1 month purchase. You can't take a decision here. Who have to take a decision? Creditor, supplier have to take a decision. Go and ask him, what is the credit period allowed by the supplier? Are you all really with me? For example, if he is saying that I am ready to give you 2 months credit, into 2 months, that much money out of this gross working capital have been invested by the outside party. That amount, no need to invest it by myself. Comfortable? Coming to direct wages, man. That is also a spontaneous working capital. You have to go and ask your, sir, employees that, sir, don't ask me wages today. First work, let the month over, then get the wages. So estimated labor hours, how much hours they are going to work. Into wage rate per hour. For example, if they are going to work, for example, 5,000 hours they are going to work. Every hour 10 rupees you are going to pay the wage rate. So 5,000 into 10 comes to 50,000 divided by 12. Divided by 12. That means, sir, 50,000 divided by 12 means 4,100 and some numbers you are getting into average time lag in payment of wages. Is it the delay is half month? Is the delay is 1 month? Or the delay is 2 months? Generally wages and all 1 month delay will come. But in special question, they may say 0.1 month. Next one is overhead. Overhead in the sense means you would have taken factory for rent. That rent you will not pay on the first day of a month. You will ask the landlord that please wait till the end of the 1 month. Right? So what is the estimated overhead? This is not unit based. You know in costing that variable cost will move according to the units. Whereas the rent will not move according to the units. Right? That's why it is not based on units. That's why what overhead? Estimated overhead. Divided by 12 months or 365, whatever it may be. You will get the overhead per month into average time lag in payment of what? Overheads. Then you will get the total money going to be invested by the outsider in our business. That money we no need to invest. So that can be reduced as current liabilities. So number of days in a year can be taken as either 365 or 360. This is how you have to manage your working capital, my dear lovable students. Current asset means inventory. Inside inventory you are having raw material, WIP and finished goods. Clear? You are having debtors. In that trade debtors will be there, bills will be there, and minimum cash balance. You will be getting gross working capital. This is the amount you have to invest in your business, provided if there is no spontaneous suppliers of finance. Who are the spontaneous suppliers of finance? Like trade payable, like bills payable, like wages payable, like payable for overhead. You will get the current assets over current liability. This is called as net working capital. Correct, sir? To this working capital, sometimes these calculations may undergo speculation. That's why every company want to safeguard themselves. So they want to keep what margin? Safety margin. At safety margin, you will get the net working capital. Comfortable, sir? This is how you have to estimate the working capital. In the coming slot, we will be start doing, my dear lovable students, estimation of working capital. Question number 1. Working capital management, RTP November 2022 question. Right, sir? This is estimation of what capital? Working capital. Till now, whatever we have discussed from here, will be solving that question. Comfortable? Are you all really with me? Have a revision up to this and come back. We'll solve that question. Sir, very happy evening to all. So we are doing working capital management. My dear lovable students, we are going to complete the entire revision of the FM. In that, the last chapter is working capital management. In that, the last topic is the cash management. Sir, actually, we have analyzed the stock by way of stock holding period, debtors by way of debtors management, under total approach, under the incremental approach, and also, my dear lovable students, we have analyzed the factor decision also. Sir, another strongest important component of the working capital management is a cash management. We will be going through the theory part first. We'll be doing one solid question from ICA study material, which is an expected question for exam. Treasury management. Sir, what is mean by treasury management? Okay, sir, debtors management we have heard. Debtors management means how much should be the debtors collection period. The same way, treasury management encompasses planning, organizing, controlling the fund. How much fund you should keep? That's what planning the fund. So from where and all we can, sir, source the fund, organizing the fund, and control the fund and working capital of an entity in order to ensure best use of the fund. Always we have to maintain liquidity, reduce the overall cost of fund, and mitigating operational and financial risk. This is what the job of group of people called as treasury management. So what are the functions of treasury management? So treasury management means it's a department inside the organization. They will be mainly doing banking. That means they will be depositing money into the bank, withdraw money from the bank, keeping the sufficient fund at the organization, and they will, sir, taking care of fund management. For example, tomorrow if I have to pass on a check to a creditor, they will ensure that the balance money is available in the bank. For example, they will ensure the proper collection from debtors on a time-to-time basis, and they will be taking care of the corporate finance, currency management, cash management. This taking care of all these things is what the function of one of the department in an organization called as treasury management. Okay, sir? Now, management of cash. Sir, we can easily manage even debtor. We can easily manage even the creditors, but managing cash is really headache. I will tell you why. The following figure highlight the cash surplus and the cash shortage position over the period of cash budget for the pre-planning to take corrective and necessary steps. Sometimes this line is there. This line is the, sir, expected cash and bank balance with the company. Expected cash and bank balance with the company. Okay, sir, if I am keeping fund more than this, this is called as cash surplus. Unnecessarily, I am holding huge money. Sir, if I am holding less than the line, that is called as cash deficit. In an organization, what should not be there? Cash surplus should not be there, and cash deficit should not be there. I have to keep the cash for my need. What are my needs, sir? Sometimes my need may be transaction need. In order to purchase the goods, pay the salary, pay the wages, I need cash. That's what transaction need. Or speculative need. So there is a good speculation of shares. Okay, I will buy the share, I can sell the share. For that, I can keep cash. And precautionary need. Sir, tomorrow, without information, some quick expense may come. For that, I have to keep some buffer cash. Are you all with me? Okay, sir. How to find out that? You said that, sir, 50,000 is the raw material stock you have to keep. Like that, datas we have valued. How I can value the cash flow? I am having three methods, either receipts and payments method. How much cash is going to come? How much cash I have to pay? That's what receipts and payments account. Expected receipts and payments are considered. Cash inflows and cash outflows of all functional budget, including cap expenditure budget, are also considered. Then I will know that, oh my god, next month I'm going to have a cash shortage, or next month I'm going to have a cash surplus. If surplus, I will deposit somewhere. If shortage, I will arrange fund in advance. So I will not be in a position of cash out. This is one method. Method number two, adjusted income method, my dear lovable students. Adjusted income method in the sense means I will start with a net profit as per P&L account. Indirect cash flow method, that's it. Sometimes the depreciation debited to P&L account should be back, added back. All the non-cash item will be removed. All the impurities will be removed. Annual cash flows are calculated by adjusting the sales revenue and cost figures for delay in receipts and payments and eliminating non-cash items such as depreciation. By that way also, you can budget the cash. We have budgeted stock, raw material stock, sir, finished goods stock, WIP stock, debtors management. Generally, till now, sir, cash is given in the question. How they are giving in the question? Either they will be following the receipts and payments method, or they will be following the adjusted income method, or they will be following the adjusted balance sheet method. Adjusted balance sheet method in the sense means they will take the cash, closing cash balance from the balance sheet, and they will see share capital is there increase or decrease, reserves and surplus is there in increase or decrease, like that. Item of balance sheet are predicted by expressing what type of asset. Each except cash and bank. That means all other item in the balance sheet I am predicting. Then I am keeping the total liability side. I will drag total liability side is equal to total asset side. If I know all the asset other than cash and bank, I can take cash and bank as balancing figure. Are you with me? And short-term liabilities as a percentage of expected sales. The profit is also calculated as a percent of sales. Adjustment to long-term liabilities is also made. So these are the three ways in which we can predict the cash. Either put the cash budget, that is called as receipts and payments method, or take the P&L, take the net profit. Sir, you treat that net profit as the cash available with you. You adjust back, sir, add back depreciation and all. You can easily find out the cash flow from operating activity. Sir, if the cash flow from operating activity is negative, that much cash is required, you can keep that cash. Or adjusted balance sheet method means you predict all the other elements of the balance sheet except cash and keep cash as balancing figure. Coming to the cash management models, is there any particular models, any theorem like, sir, Gordon model, Walter model, Modigliani and Miller approach, like that some theorem is there? Yes. Sir, if everyone are coming up with every element of the working capital, why cash can't have? That's why William J. Baumol's economic order quantity model, which is nothing but the same EOQ, what we have studied in costing EOQ, my dear lovable students, exactly applicable to cash, which is nothing but root of 2AB divided by C. Or Miller or cash management model. So two famous models are there for cash management. Number one, William J. Baumol's economic order quantity model, or Miller or cash management model. What William J. Baumol is saying, according to this model, optimum cash level is that level of cash where carrying cost and transaction costs are the minimum. So two things are there, carrying cost should be there and transaction cost should be there. In order to carry the cost, I have to incur a cost. In order to do the transaction, I have to do the cost. I will tell you, if I keep lot of money in my office, actually anytime I can use that cash, then transaction cost will be zero, because every time whenever I need cash, no need to go to bank and withdraw money from the bank. But I can't keep the cash generally as if I'm keeping a normal paper. Someone will come and take, correct? So I have to take care very properly. I have to buy the Godrej, sir, locker. I have to keep inside that. So automatically carrying cost will increase. One problem, if carrying cost increases, transaction cost decreases. If transaction cost decreases, carrying cost increases. What William Baumol economic order quantity is saying, that it is a level at which the carrying cost will be exactly equal to the transaction cost. Formula for determining optimum cash balance, root of 2AB divided by C. What is C? Optimum cash balance. That is the maximum cash balance you have to keep. Sir, U stands for annual cash disbursement. You check what is the annual demand of the cash. In a year, how much annual cash you are going to disburse. P stands for fixed cost per transaction. In order to withdraw money from bank, every time how much bank is charging, that's what fixed cost per transaction. And S stands for opportunity cost of 1 rupee per annum. That means in the sense means carrying cost per unit per annum. Are you really with me? Instead of keeping the money in my hand, if I deposit it somewhere, I will be getting some return. What is that opportunity cost? So this can be explained with the following diagram. Nothing. Transaction cost will come down and holding increases. There will be a total cost. That is there is a point where my transaction cost will be exactly equal to holding cost, correct? Carrying cost. Sir, it is a point at which my optimum cash balance is a point at which I should not incur highest money for the transaction cost, and also I should not incur highest money for the holding cost. That's it. What are the assumptions of William J. Baumol when this EOQ model will be applicable? Cash needs of the firm are known with certainty. I should know that this much is the cash need. This much is the, if I don't know the annual consumption of the cash, A itself is not available, then how root of 2AB divided by C I can apply? Fine. Cash is used uniformly over a period of time, and it is also known with what? Certainty. Sir, in Y0 itself, entire cash if you are going to spend means it will not be annual consumption. Correct? Cash should be spent uniformly, and the holding cost is known, and it should be what? Constant. You should know the holding cost, and throughout the year it should be constant, and transaction cost should be known, and also it should be what? Constant. Every month if the transaction cost and holding cost is changing, root of 2AB divided by C will not work, right? The second person, Miller or cash management model. Another person is saying that. William J. Baumol. What is saying that? How you can exactly say that this is the cash expense in a year? Sir, according to this model, the net cash flow is completely stochastic. Stochastic in the sense means you can't predict. It will keep on changing like right, sir? Like ECG எடுத்தா எப்படி இருக்கும் அது மாதிரி இருக்கும். Sir, someday cash requirement may be very high, someday cash requirement may be very low. You can't have you can limit upper control limit and return point and lower control limit. Right, sir? Yes, sir. Some days it will be at upper control limit, someday it will come to lower control limit, someday it will rise. So Miller or cash management is saying that this model is designed to determine the time and size of transfer between investment account and cash account. What Miller is saying that keep a cash account plus the investment account. If you don't want money today, sir, swap it, sir, from the cash account to the investment account. Tomorrow, if you want money, quickly re-swap it from the investment account to the cash account. Adillame, why are you holding unnecessary cash in the office? There should be one-click cash will be released. There are short-term, lot of investments are there. Correct? Instead of keeping that much cash idle in the office, try to invest somewhere and get some return. Hello? Yes, sir. In this model, control limits are set for what balance? Cash balance. For example, I will be having a control limit of 50,000. Once my cash balance holding above 50,000, automatically in my account it will sweep to investment. Okay. If I pay something from my 50,000, for example 30,000, automatically the investment will die and the money will come to this account. So always I will keep a minimum balance. These limits may be consist of H as upper limit, Z as return point, and 0 as the what limit man? Lower limit. Sir, when it touches upper limit, when the cash balance reaches the what limit? Upper limit. Transfer of cash equal to H to Z. This much cash is there, no? Is invested in marketable securities account. This difference will go and invest. That means I won't what man? Keep money more than return point. Okay. When it touches the lower limit, transfer from marketable security account to cash account is made. I will sell the security, money I will get, and I will refill, and I will come to return point. Are you totally with me? So, return point this is called as return point. During the period when cash balance stays between HZ or Z0, high and low limit, no transaction between cash and marketable securities account is made. No transaction. So, this is what the idea of the Miller. It's not Modigliani in Miller or cash model, right? Sir, these are the recent developments. Now, no need to keep cash at all. You can do electronic fund transfer. You can open zero balance account. Money market operations you can do. Petty cash impress. For the small expense, you can have petty cash. You can have temporary cash surplus. Electronic cash management system. Virtual banking and all came in today. So today, sir, keeping that cash is not a big deal. They are saying... From ICA study material, we are having a very small question. We will be solving that question. Sir, it will be a very good question, my dear lovable students. With that, we can announce that we have completed the FM. Branchi Limited question. This is an ICI study material question. Branchi Limited is manufacturing company producing and selling a range of cleaning products to wholesale customers. They are selling something. Okay. It has 3 suppliers and 2 customers. Super. Abdina debtor 1, debtor 2, debtor 3 and creditor 1 and creditor 2. From debtor they have to get the money and to creditor they have to pay the money. Branchi Limited relies on its cleared fund forecast to manage its cash. This is the crux of the question. There is a concept called as cleared fund forecast. I will teach you what is cleared fund forecast. You are an accounting technician for the company and have been asked to prepare a cleared fund forecast for the period Saturday 9th August, Saturday 9 August to Wednesday 13th August. Abdina 9, 10, 11, 12, 13. You have to prepare 5 days cash budget. That's it. You have been provided with the following information. Okay. Sir, receipts from customer. We are having how many customers? 3 customers. 3 debtors, no. 3 suppliers. 3 suppliers and 2 customers. So, 3 suppliers na creditors. And what? Customers means debtors. Correct? I am having 2 debtors and 3 suppliers. So, debtor 1, debtor 2. Creditor 1, creditor 2, creditor 3. Receive from customers. Sir, what is with regard to customer? Customer means I have to get money from the debtor. I am having W limited and X limited. Sir, what is the credit terms? 1 month, calendar month. 1 calendar month. That means if I sell today, I will get money only after 1 month. Payment, sir, BACS, that is some bankers, automated clearing services. Key bracket. Okay, right. Sir, how much sales happened on 9th August? 1,50,000. 9th July, 1 lakh. Look at. 9th July na 9th August it will come. Because 1 month credit. So on this day, this 130 you will get. But this 150 you won't get. Correct? 140 you will get after 1 month. So when I prepare the next month cash budget, this 150 will come. But X limited, none, no credit sales. Check only, my dear. Sir, today's check, sir, 1,80,000. Today itself, money will come in bank. This 160 would have came last July itself. I am not preparing for July. I am preparing for August. Am I right? So this 160 is irrelevant for the data now. Receipt of monies by banks, sir, is instantaneous. Instantaneous means IMPS. So when they made the transfer, immediately money will come to our account. That's it. அப்போ எப்போ transfer பண்ணிருப்பாங்க? 9th July I made the sale. 9th August they will transfer. 9th August itself I will get the money. அப்போ on the 9th August, look at here. On the 9th August, Saturday, hello sir, from W Limited, I would have got 1,30,000 or no other information. That's it. One data done. Comfortable? What is the status of the next one, man? X Limited checks will be paid into Branchi's bank account on the same day as the sale is made and will clear on the 3rd day following this, excluding the day of payment. Excluding the day of payment. When you deposited 9th. So leave 9th. Then 10, 11, 12. So on 12th, on the 3rd day, on 12th, will the money of 1,80,000 will be credited? Yes, sir. So come on. Sir, in your cash account, 9, 1,80,000 have not came. Sir, 10, this is 10. 10, 11 and 12. 12, 1,80,000 came. Correct? That means when you deposited that money into the bank, 9th. That means on 9th, come on. On 9th, uncleared fund float. Uncleared fund float means I deposited but money has not been cleared. So on this day, 1,80,000 it will show. This day also 1,80,000 it will show. This day also 1,80,000 it will show, but here it will get cleared. That means till it clear, their cash account will show that, okay, this much money has to be cleared. Easy pa. Are you really with me? Come to the next one. Payment to supplier. How many supplier? 3 supplier. A limited, B limited, C limited. Correct? Sir, credit terms 1 calendar month. 1 calendar month means, sir, payment is standing order. Standing order means I said to the bank that every month you pay something. That's what standing order is all about. Right up. 9th August purchases 65,000. When I made purchase, 9th August. I am preparing cash budgets for August. August 9, 10, 11, 12, 13. Comfortable? After 1 month only I will make the payment. So this will not considered at all. So what is the August முன்னாடி month? July. Sir, July 9th I purchase. So I will make payment on 9th of August. Am I right? What is the value? 55,000. என்னப்பா clarity இருக்காப்பா? I don't really with me? Yes, sir. Sir, 9th June. 9th June means it would have paid on 9th July. So this is irrelevant because I am preparing cash budget for August. Come on. Branchi has set up a standing order for how much? 45,000 for a month to pay for the supplier from A Limited. This will leave Branchi's bank account on 9th August. Every few months, an adjustment is made to reflect the actual cost of supply purchase. You do not need to make this adjustment. என்ன சொல்றாங்கன்னா, sir, what Branchi is doing, no, they are making payment to supplier, which is A Limited, right? Sir, 9th August they purchase 65,000, correct? My dear lovable students, this 65,000 they will not make payment now. They will make the payment in the next month. But this 9th July, they will make the payment on 9th of September. August. Sir, how much is the payment? 55,000. So 55,000 purchase I made on 9th of July. Correct? That payment I will made exactly after one calendar month. That means 9th of September, I will make 45,000 rupees payment. Am I right? Yes, sir. Are you really with me? Sir, clearly understand? This is irrelevant data. This is irrelevant data for this month. It will come only in the next month. Sir, last month 9th, I made a purchase of 55,000. If that is the case, means this month 9th, I have to pay 45,000. Are you really with me? So last month purchase how much? 55,000. So current month payment 45,000. 45,000. Why? Because it's standing order. Whatever may be the purchase I made, every month I will pay only 45,000. Sir, then balance 10,000, it will be adjusted in the next month. That's what they are saying. Branchi has set up a standing order for how much? 45,000. A month to pay for supplier from A Limited. From A Limited, they will pay only 45,000. This will leave Branchi's bank account on 9th of August. So from 9th of August, look here, outflow. Payment, 9th of August. This is 9th. 45 will go for the A Limited. Are you really with me? Yes, sir. Nothing more, nothing less. Sir, up 10,000 extra, sir. Every few months, sir, adjustment is made to reflect the actual cost of supplies purchase. You do not need to make this adjustment. Balance 10,000, you don't worry. That future automatically it will adjust it. Okay, wow. Next, B Limited. How much calendar month? 2 months calendar. How you are making payment? Check. Check na, sir, Q you have to make in the cash. Correct? Yes, sir. Sir, this month irrelevant. This month also irrelevant because 2 months period. Correct? Only 75 is valid. Because if I purchase on 9th June, I will make payment on 9th September. July, August. Correct? 9th of August. I am preparing cash budget for August. So this 75,000 is valid. Let me ask you a question. Is this 75,000, sir, is any standing instruction? No. Branchi will send out by post check to B and what? C on 9th of August. So on 9th August only I will send the check. That day itself money will not go. But the amount will leave its bank account on the second day following this, excluding the day of posting. Leave the excluding day of posting. When they posted 9th. So leave 9th, 10, 11. 11 money will go. But till that they have to keep their bank account. That sir, payments, correct? What is the total purchase? 75,000. And this 85,000 also. Because for B and C there is no standing order. But C there is no calendar month. Correct? Sir, it is none. None means, sir, 9th August purchase made, 9th August itself they have to pay. This 95,000 they have to pay. This they would have already paid last month. This 85,000 they would have already paid last month, right? So this 75 plus 95 will be the matter. 1,70,000. And the 1,70,000 wow, where level. Comfortable? So that 1,70,000, I will show it as payable. Sir, this is uncleared fund float. In the sense means this has not gone from my bank account. But this is yet to go. Correct? When it will go, sir, 9th August over, that day only I posted, 10th August it will go. 11th August it will go, right? Yes, sir. Sir, 11th August it gone, so I have not shown it. So on 11th August, sir, I have to show it as outflow, correct? For the what limited, B Limited, on 11th August, 75 gone out. And for C Limited, 95 gone out. சும்மா பார்த்து எழுதுறதா cash budget. Are you all agree with me? The same question is an ICA question, will be repeated for this time. I am expecting this question to test because 10 mark cash budget, no one will prepare and they will give you a shock. Shock like a shock like easy. Easy wages and salary, July month and August month. You are in the month of August. We are preparing the cash budget for August 9, 10, 11, 12, 13. Weekly wages is 12,000, 13,000. Okay. Monthly salary 56,000, 59,000. What they are going to do? Factory workers are paid cash wages weekly, every week. They will be paid 1 week wage on 13th August for the last week's work done in July. They work a week in hand. Apo, you are preparing for August, sir? Yes, sir. So whatever work they done in July, this is the work done in July, weekly wages they have given. Okay. Apo, July month they will pay only in August. August epo 13. August 13. So this day they will pay. This day they will pay 12,000. Sir, yedoda payment. July last week payment only 12,000. Correct? That they are going to make the payment on 13th of August. But August they are liable to pay 13,000. They will pay in maybe August end or September. I don't know because I have reached only 13. Next week will not go to September. Next week will be there in August itself. Hey, I am preparing only for 5 days, pa. Correct? So on August 13, there will be cash outflow. Correct? There will be cash outflow for wages of 12,000. Exactly matching 12,000. Comfortable? Sir, but this is monthly salary, not weekly. Monthly salary. What is the terms for monthly? All the officers, workers are paid salary monthly by BAS. You know what is BAS? BAS means immediate. When you make the payment, immediately it will reflect. Salaries for July will be paid on 9th of August. But this salary 56,000 I will pay on 9th of August. Can I make the payment? On 9th of August I have to come. 9th. Sir, salary 56,000 will go out. That's it. All other things will be dash. Simple. Coming to the next one. Other miscellaneous payments. Every Saturday morning. Okay. Every Saturday morning. Saturday. Come on, Saturday. Come on. Sir, you are accounting technician for the company and I've been asked to prepare a cleared fund forecast for the period Saturday 9th. So Saturday, starting point Saturday. Okay. Every Saturday morning, petty cashier withdraw 200 from the company's bank account for the petty cash. The month leaves branch's bank account NSR straight away. That means every Saturday they will withdraw 200. That means, my dear lovable students, 200 will come to the cash account. Because from bank they will withdraw. Bank balance reduces and cash balance increases. Correct? This is what petty cash 200. No other thing. Okay. What they are going to do with that? The room cleaner is paid 30 from the petty cash every Monday morning. Every Monday morning, 30 rupees I will pay to the room cleaner. How much I withdrawn? 200. That will increase the cash balance. Cash balance. Right? Now from that, 200 I am spending 30. I am spending 50. I am rupees 10. All these will affect my cash balance. அப்போ எவ்வளோ rupees வெளியே போகும்? 30 rupees வெளியே போகும். Come on, 30 rupees. Sir, what you are preparing? Cleared fund forecast. What, man? Where is that 30 rupees? Monday. Monday is 11th August. Monday. Where is that 30 rupees? Nowhere is there. Because that will affect only your cash account, not the bank account. What I am preparing is the bank aspect. Sir, when I withdraw, bank balance reduces and it will come to the cash. Sir, I am not preparing petty cash, pa. Am I preparing petty cash account? It will affect only the bank and the petty cash. The money will go out of the petty cash. Correct? Yes, sir. Office stationery will be ordered by telephone. கூப்பிட்டு சொல்லிடுவேன் கொண்டு வாப்பா. On Sunday 10th August to the value of rupees 300. This is paid by company debit card. Debit card. Such payment are generally seen to leave the company account on the next day working day. So when I make the payment of 300 on Sunday, Monday it will go. So Monday 11th August is a Monday. Monday 300 rupees will go out. Yes, sir. So till that day, so Sunday it will be uncleared. Correct? So Sunday already 1,70,000 was there. Plus 300, 1,70,300. On Monday everything will become clear. It will become zero. Never comfortable. 5 new software will be ordered over the internet on 12th August at a total cost of 6,500. On 12th of August, you ordered 5 new software. A check will be sent on the same day. Amount will leave Pranchi Limited bank account on the second day following this, excluding the day of posting. What is the day of posting? 12th. Leave 12th. Then 13, 14. From 14, 16,500 will go out of bank. Correct? But 14 is there? Not there, sir. So, but here you will not show. But it will be there in the uncleared fund float. That means from 12th. But from 12th onwards, it will show 6,000. That means what is uncleared fund means we are yet to pay 6,500. So it is an alarm to the company that don't spend too much. Please keep this much money in the bank account for sure. That is called as uncleared. Balance of Pranchi's bank account will be how much lakh? 2 lakhs on 9th August. From that only we started opening cash balance given. This represents both bank balance and the what fund? Cleared fund. So that is a starting point, man. 2 lakh. Look at here, man. Sir, cleared balance brought forward 2 lakh. You are supposed to get the cleared balance carry forward 2,28,200. Ebdina, here you are having 28,200. What is the 28,200? Sir, receipts, you got 1,30,000. Total 1,30,000. From 1,30,000, come on. 45,000 is you made payment. 56,000 you made payment. 200 you made payment. 45, 56, 200 comes to 1,01,200. From 1,30,000, if you make 1,01,200, 28,800 will be cleared. Cleared means excess money with you. So already you are having 2 lakh. Now you are having 28,800. So 2,28,800 will be the balance. That's it. Sir, this part no uncleared fund float is just a control account, not the cash account. Correct? Coming next one. Prepare a cleared fund forecast. Cleared fund forecast na clear anada mattum podu. For the period Saturday 7th August to Wednesday 13th August, including using the information provided. Show clearly the uncleared fund float each day. Appo inga va. That's it. 7th August illa 9th August illa 9th August. Yes, 9th August to 13th August. Sir, next day Sunday leave pa. No receipt, no payment. That means the same 2,28,200 will be carried forward. This will be the closing balance. Correct? This will be the opening Monday. But Monday we got a paid. We paid 75 and 95 and 300 for stationery. So 175, 300 gone. We are having 228,800. So from 228,800, 1,70,300 gone means 58,500. That will carry forward to the next day. Next day we receive money from 1,80,000 from W Limited. Correct? No payment. So 58,500 plus 1,80,000 comes to 2,38,500. Next day morning 2,38,500 was there. From that wages we made 12,000 payment. Hello sir. Total 12,000 gone out. So from 2,38,500, if 12,000 gone out, 2,26,500 is a cash balance. This is simply cash account. Coming to the uncleared fund float. Both under receipts and payments you will be having uncleared fund. Correct? Sir, receipt 1,80,000. From whom you got 1,80,000? From the debtor. But it has still not cleared. Sir, you made payment to the creditor 1,70,000. So total 10,000 gap was there. Correct? But we are having book balance of 2,28,800. Now, even on this day, our check has not been cleared. Even on this day, our check has not been cleared. So 170 was there and again 300 was there. So total net of 9,700. But on this day end, we were having 2,38,500. Every 2,38,500. Total book balance carry forward. $1,80,000. This was the fund to be cleared. 2,38,800. 300 net off. This we are supposed to get. This is supposed to be paid. Difference. Namakita irukku. Excess cash irukku. Correct? So last book balance was 2,38,000. Now the book balance is 2,38,500. Next month, still this has not been received. It is still receivable, but this has gone out. According to us, 1,80,000 receivable and total book balance carry forward 2,38,000. Sir, somewhere can you manage this 2,38,500? மேல 2,28,800 is the cleared balance, correct? 2,28,800, right? 2,28,800. 2,38,500. 2,38,500 is the total book balance. Yes, sir. This become end, second day end. This is the balance on the second day end. Yes, sir. 58,500 opening balance. Yes, sir. About 2,38,500 plus 58,500, 2,97,000. This is cleared balance. Minus 58,500 is a cleared balance. Correct. Carry forward. Correct, sir. 58,500 plus 1,80,000 is the total to be receivable. So total 2,38,500 should be there in our cash. This is actual cleared amount. This is yet to cleared amount. This is actual cleared amount. 2,28,800. This is yet to cleared amount. அவ்வளவுதான். இது ஆல்ரெடி கிளியர் ஆனது, இது கிளியர் ஆக வேண்டியது. ரெண்டும் சேர்த்தா எனக்கு எவ்வளவு இருக்கும் புக்ல. This is, look at here. 2,38,500 is a cleared balance. Correct? But 6,500 minus 6,500. That means 2,32,000 will be the net balance. Here what I am showing is, sir, வரவேண்டியதெல்லாம் வந்தா, கொடுக்க வேண்டியதெல்லாம் கொடுத்தா, what is the net balance? Here 2,26,500. I am liable to pay 6,500. So I can plan my fund only to the extent of 2,20,000. Comfortable. Very good question. Easy question. I say study material question. If you look at the question, everyone will feel that, wow, it's a very big question. It is not my area. But when you read it, it's a very easy question. The same question can be tested for 10 mark in exam. My dear lovable students, we can say that we are through with the revision and the workout of the EFM. Ensure that these topics you have completed in your FM. Number 1, cost of capital. This will surely come for 7 mark in exam. Cost of capital. Topic number 1. Topic number 2, capital structure theories. This is coming for 5 mark in exam. Number 3, arbitrage process. If it comes coming for 5 mark in exam. Number 4, EBIT, EPS analysis, a sure shot 5 mark area. Number 5, indifference point. Sir, if it comes 5 mark area for exam. Number 6, leverage analysis, mandatory 5 to 6 mark area for exam. Number 7, ratio analysis, sure shot 6 to 7 mark area for exam. Number 8, dividend decision. Surely they are asking for 5 mark question from exam. Number 9, capital budgeting. Oh my god, 8 to 10 mark area for exam. And the last one, working capital management, a 6 to 7 mark area for exam. Sir, in this, if you are asking me, can I take, is there any irregular area? This is one of the irregular area. I will never say that this will not come in exam. But this, if time shortage, if you don't have time, arbitrage process, you can keep it at the end. Sir, the next one, you can keep it at the end. Capital structure theory is also okay. 2 topics. Other than these 2, all the topics are regular topics. You have to prepare. These are the top 10 movies of the sir FM. If you are preparing this 10 topics out of 50, you can write for 50 in examination. It's very happy to say that we have completed the entire revision and the workout of the EFM. That's it. Sir, thank you for watching, my dear lovable students. You can, sir, you can update your reviews regarding the classes to this number 960-500-1043. I hope that I tried my level best to give you the conceptual clarity. You can inform me how you are feeling. I'm wishing you all the very best for the coming examination. Thank you. Bye-bye from A&M.